Once again, good afternoon, everyone. My name is Yakub Rahimov. Today I'm joining you from Cyprus. It's sunny here, and I'm together with Orbex Broker. We will be starting today the introduction to Forex. It's the beginning of the complete course, which we will be carrying out in the next 6 to 8 weeks period. Introduction to Forex is just as it says, the introduction for the course, and we will be having, depending on the week, 1 to 3 webinars every week, and we will also from time to time be having live market analysis webinars. The aim of this webinar is to make sure that we deliver the high level of education to you all. And of course, not like my other webinars, these webinars are not going to be charged. Some of you know, I see some familiar faces over here. In general, I charge $2,499 per training. However, because of this special association we have between Orbex and A2ZForex.com, we will be carrying out these webinars completely free of charge, depending on the terms and conditions, which I'll go through in a bit. Before we go ahead and discuss about what is Forex, I would like to deliver the following risk disclaimer for your attention. Trading Forex, or in another word, foreign exchange on margin, carries a high level of risk, and therefore it may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience and risk appetite, and may you need one, do acquire a third-party consultancy. You should be aware of all the risks associated with Forex trading and seek advice, may it be necessary. So what is really Forex? I hear this question pretty much wherever I go. I go to a restaurant, some people who know me ask, what is Forex? How do you do it? I go to airport, people still ask me, what is Forex? My answer for Forex is very simple. Forex is everything you see, from computer to use, to flight ticket you buy, to mobile phone that you have. Forex is wherever you see. But in another, more definitive way of saying what is Forex is basically Forex is a form of exchange where transactions happen in a decentralized trading environment. And this environment enables you, the trader, buy and sell currencies at an instant rate. Basically, what you do is that, let's say you can imagine traveling to Japan from the US, or from Japan to the US. Obviously, in every country, you have your own currency. Or let's say in my case, I live in Europe and I quite often travel to other countries. Let's say let's imagine that I'm going to be traveling to Australia. Today I have basically 1,000 euro, let's say, in my as a cash, and I can exchange this 1,000 euro to one-on-one rate to Australian dollar. Okay. And if I go ahead and on the way back from Australia, let's say I have only managed to use 500 Australian dollar, but this time euro has gone cheaper against Australian dollar. Let's say this time one euro is 99 Australian dollar cent. So I would, in this case, if I exchange the money, I would make a little extra margin. And imagine in the Forex market, which is at a much faster rate, and also added with some margin, leverage involved, you can multiply this small money that you are making, especially with your broker, who would be providing you 1 to 500 leverage, meaning you would get 500 times the money that you have provided with a credit from your broker. And this way you would have the 500 times of the general profit opportunity that you have. Okay, that's in short, in a nutshell, what is Forex. Okay, overall Forex is a vast market. it's indeed the biggest one of all the capital markets or all the financial markets out there. When we say capital markets, quite often we understand stock market, bond market. When we say stock market, we understand the stocks out there, S&P 500, Nasdaq, DAX, etc., which comes to our attention. Then we have the bond market. Then we have the commodities market, like the gold market, oil market, or corn market. And then we have the derivatives market, which includes the futures, contracts, options, etc. And on top of all, you have the currency market, which involves the Forex. Okay. When when you say Forex, it is basically every financial market that you are talking about, because whatever you do, you have to pretty much use a mean of currency to carry out your financial market transactions. And this is where the Forex market gets effect. Indeed, in every day, whether you want it or not, intentional or unintentionally, you do take part in the Forex market. Your government comments about your interest rate, your currency fluctuates. Your government comments about the employment rate, your currency fluctuates. This is how the current Forex market work overall. And all financial markets overall, they are all interlinked to each other. Such as, let me give you an example. We're gonna give an example about the Russian financial environment. As you know, Russian currency, which is Russian ruble, has recently, in the last 1.5 years, depreciated extremely. It has lost some 40%, if not more, value against the rest of the world currencies. The reason being is multiple elements. Number one, Russia went to, kind of a direct war with Ukraine, which is still being questioned by the world leaders. Number two, the world leaders took action. How? As an example, the oil. The oil, when Russian financial markets are dependent on oil so much, and the oil prices were pushed so much down at a level of from $100 per barrel to less than $60, $50 levels. This way, Russian revenues, the income that the Russian government was taking, also was cut down by some 50%. This way, when the government is hit by the commodities market, obviously their currency is hit as well, and the Russian ruble lost value, depreciated against their counterparts as well. This way you can see that a declining commodity market or declining commodity demand would directly also have a decline effect on the commodity currencies. I'm going to be going through more of these currency types, etc., in our next webinars as well, and I will be giving you correlations as well. Okay, but before I go through the following part of our webinar, I just want to make sure that you should be asking some questions. This webinar is meant to be interactive. Okay, so you should be asking questions, but you may also ask yourself, who is it, who is Jakub that talking to us and giving us all these recommendations and comments. In short, let me also give a small information about myself. I'm 25 years old, probably younger than all of you, well, if not many of you. And I can consider myself a professional trader, although I don't want to really use that word professional trader because there is no real definition for it. The reason why I'm saying that I can consider myself a professional trader is that I managed to understand the logic of Forex. I do not have a golden rule. I don't have some magic box, but I have managed to create a strategy which gives me an edge over the market. Indeed, when I was 18, I managed to make a 7-digit profit, and I have done this over and over in the last 6+ years of my major Forex operations. And this year, I will be publishing a book called Forex Not for Dummies, sharing my trading journey with you all my students, all my followers, that you can also grasp more information about how I do it. But on top of it, I'm also a professional Forex trainer. I tend to travel all over the world. We have an upcoming trip to Southeast Asia with our close partners, where we will be also coming and training some of you face to face. And I would love to see some of you present in my personal trainings as well. And in these upcoming webinars, we will be covering my complete strategy. It will be from A to Z of the Forex trading. These webinars are partnered with Orbex Broker and A to Z Forex.com, both parties aiming to deliver the best available education to the traders and aiming to empower the traders just like I do want to empower you. So we have the three parties, including myself, aiming to give you the best available tools so that you get the best out of the market. Okay, when I say best, I know many people tend to use it. I know what is best. For me to be able to deliver the best, I will need your full commitment, and I believe that you will be giving me your full commitment by means of being attentive, following every seminar and the webinar that we will have for you, and also sometimes carrying out the homework, because I will be giving some homework from time to time for you to be able to get the best out of the complete package. Okay, so let's go back to our overall concept, introduction to Forex, and why Forex. Why do people tend to trade Forex? In short, overall, Forex compared to other financial markets is much easier to enter. There is no time limitation, not like, let's say, stock market. It doesn't open at 8 o'clock and finish at 5 o'clock or so. Indeed, Forex market is open 24/5. I'm going to show you the world map in a bit so that you can have a better understanding of how the market is continuous all the time. You have much lower operational costs than, let's say, other financial markets. You have small spread and quite often no commission. Even if you have commission, it's very, very minor. It would be generally less than $10 per $100,000 traded. So you also have completely free of charge trading platform and also completely free of charge demo account. Not like some other markets, whenever the market is going down, you are in a big trouble. In Forex market, whether the market is in a hike or in a bad crisis, you have an amazing opportunity. I'll give you an example. When I had the best profitable period of mine, although I don't wish that happen again ever, from the Japanese tsunami that we had a couple of years ago. When the world was hit by the news that Japan was hit by a major earthquake, everyone got this fear that, oh boy, what's going to happen and so on. I saw the opportunity there, so I jumped in selling the Japanese yen. When I sold the Japanese yen by means of massive volume, I got the opportunity to make an extra opportunity. Okay, again, I don't wish this happen again, but every crisis brings an opportunity in the Forex market. Next thing, there is no fixed operational space for you. In our case at Orbex, it's our partner broker today, so I want to talk a little about them as well. So you can trade by Orbex MT4 on your PC, MT4 mobile on your mobile, on your tablet, wherever you can. And on top of it, Orbex also provides you free of charge VPS. Basically, you put all your indicators, whatever you have, in one, and you can have the same screen wherever you go, wherever you are, whenever you want to have. And on top of it, last main Forex selling point overall compared to other financial markets is that you have a major leverage. When I say major leverage, I mean really major leverage. You can trade your $1,000 as if you have $500,000 in your account. No other financial markets would be able to provide you 1 to 500 leverage. You can, but it doesn't mean that you can lose 500,000. So don't let this scare you. Okay, this 1 to 500 leverage or credit that your broker gives is just a tool for you. It's a credit that your broker gives. may it be the case, God forbid, that you lose your equity, you are entering to a losing position. Your maximum loss can be the equity that you have deposited yourself, so you cannot go into negative. Although some brokers, there are many wrongdoing brokers out there, be careful with them. They would come and hunt you for your negative balance and so on. But in our case, Orbex broker provides you the opportunity to trade with complete negative balance protection. So you will never have a negative balance at all. If you remember, I said that you have 24/5 market opportunity. The market basically opens in Japan at 10 basically, and it also closes by the time that it goes to the close of the what's called Chicago Stock Exchange close. So as long as the world financial markets are open from Sunday evening 10 p.m. GMT, of course, until Friday evening 12 p.m., you get to trade as much as you can. Okay. Then you have to also understand the overall market players. Okay, I must admit that since these are very basics of Forex trading, I'm trying to use easy words for us, because I see some people here are very new. So forgive me if I talk very basic for you. Okay. So I have to go back for some reason. It didn't happen. So we have to use some basic terms, because we have some new first-time participants in the Forex market. That's why I'm gonna try my best to use as easy words as possible, so that we don't get confusion over here. And those of you who are in the market for a longer period, bear with me, because our following webinars, I can guarantee you, it's gonna be just amazing. We will go through the specific moving average strategy that will give you fixed, well, over 8% return. Then we will go to my personal Fibonacci strategy as well, where you will get the best out of market. My Fibonacci strategy actually has 82% winning ratio. So it means if I go a little down to 80% winning ratio, I generally have 8 out of every 10 entry as a winning entry, and 2 would be just a very small loss. So which is very good compared to most of the other strategies that you see out there. So what are the market participants? In Forex market, you have right now the major market participants, more than the banks, are the central banks. Central banks are at the front line of the Forex market right now. The second, let's say, the Fed, the US Fed, goes ahead and comments about the possible rate hike. Rate hike is an increase in the interest rate of that country. The US dollar goes just crazy. It starts appreciating, although they haven't even taken an action yet. They're just commenting that we could do it. We could do it. The market starts basically going for buy the rumors, sell the facts opportunity. What I mean by saying buy the rumors, sell the fact is that they just hope to hear that the Fed will be buying, or the Fed will be hiking the interest rate. So until that real action takes place, the market goes bullish on US dollar. This is indeed what we have had. If you have been trading in the market, this is indeed what we have had in the last 4 or 5 months. Because since basically November of 2014, the Fed has been just hinting here and there that we are possibly going to be doing rate hike. We are possibly going to be doing the rate hike. Each time it happens, USD against pretty much every currency pairs appreciates like crazy. Then we have the governments, we have the investment companies, we have the brokerage companies, retail investors, etc. But the biggest market movers besides the central banks are the major investment banks. Okay, if you have the opportunity to see the investment banks analysis, do your best. I know A to Z Forex is providing the investment banks analysis pretty much on daily basis. I highly encourage you to go to a to zforex.com, check the investment banks outlook for that day. Like today it was saying that sell euro dollar by UBS Bank from Switzerland. So if you would have followed it, you would have made pretty good amount of money. Then we have some of the terms that we will be using quite often. Many times I don't say buy here, say sell here. I would say I'm short euro dollar. That doesn't mean that my euro dollar got shorter. It just means that I'm selling my euro dollar. Okay, when I say I'm long euro dollar, it means I'm buying euro, selling dollar. It means I'm going for a stronger euro. Okay, and these are some of the terms. Then we quite often use what's your TP. TP means take profit. It's the happy level for you. That's why I have put here this happy face. When take profit hits, it means you are making a profit. When your SL, which means stop loss, is hits, it means you are making a loss. Stop loss and take profit are your predetermined levels of satisfaction, we can call. TP, in another word, take profit would be your predetermined profit level, where your order would be closed automatically because you have already set a pending order for your entry to be closed. Stop loss would also be your predetermined loss level that basically would be defined as your maximum available loss that you are willing to have. All right, and then we quite often use the PEEP. I had a friend once. I said the PEEP value on euro dollar is almost $10. He said, PEEP is your daughter's name or girlfriend's name? So it's not PEEP doesn't mean is someone's name there, but it is the smallest measure of change in a currency pair. It basically derives from the price change. Okay, and we also have a term called spread. The spread is the difference between your buy and the sell value. I'm gonna make a little better explanation on what is spread and what is PEEP here, and I'll give you another point. Okay, I have here of course it's not a live price. I wish euro dollar was at this level right now. I would have been much happier since many of my savings are in euro. But nevertheless, let's say this way. Euro dollar current, hypothetically, imagine that euro dollar current sell rate is 1.30776 and buy rate is 1.30792. If you look at it, what you see here is that the difference between buy and sell, basically 1.30792 minus 1.30776 would be equal to 1.6. 1.6 here is 1.6 pips spread. Okay, the very last digit you have, because I'm looking here for a 5-digit currency. After the dot we have 5 digit. Very last digit we have, the 5th digit, would be called point, and the 4th digit from the last would be our spread, our PEEP. Okay, and any move, let's say if this number 77 would have become 78, we would have had 1 PEEP increase in our sell price. Okay, let's now imagine a position that we would be taking. Imagine that we are selling or shorting euro dollar at 1.30776. We put a TP, which is the target that we want to have, at 1.30034, and our stop loss would be at 1.31068. Basically what we are doing here is that we are aiming to make 74.2 pips profit over here. The way I calculate it is that this number, entry level minus take profit level, because we are selling, we want when you are selling, you want your currency to go down. Basically over here we want the currency to go down from 1.3077 to 1.30034, and if that happens, we are aiming for 74.2 pips profit. Okay, if that happens, we would be making 74.2 pips profit. Meanwhile, if the price of the market, if the market goes against us, instead of euro dollar depreciating and it starts appreciating, it starts going against us, basically it starts going upwards to the level of 1.31068, we would be in that case making a loss of basically 31.2 pips loss. The way I calculate, or the way the 31.2 pips is put forward, is that you deduct the stop loss from you deduct your entry level from your stop loss level. Basically 1.30776 would be deducted from 1.31068, and the result would be 31.2. If you look at one thing over here at this entry and take profit levels, you would see also a risk reward ratio. In this specific example, I'm risking 31.2 pips to gain 74.2 pips. That's more than 1 to 2 ratio. Basically, I'm risking 1 to get 2. Sorry for my handwriting. So this way, since I'm risking less than I aim for, I get a better risk return. This way, my investment would be longer lasting. Even if I make, let's say, 3 entries out of 3, 2 of them would be loss, I would still be profitable for the fact that I would only be losing 31.2 pips multiplied by 2. It would make 62.4 pips. Even if I make a loss of 2 times, basically 62.4, and I would win only 1 time of 74.2, I would still be ahead of the market. Since there is no space over here, we're gonna write it here. I would still be making a profit of, oh, my amazing handwriting, more or less 12 pips profit. It would be 11.8 pips profit. If I would have had 1 lot of entry, that would mean that 1 lot basically means 1 standard lot. That would have mean that although I would make a loss twice and I would make a profit once, I would still be making over $100 of profit, depending on the currency pair that I'm trading. Okay. Now, we mentioned about long, short, sell or buy. Okay. You would also quite often hear some words like the bulls are going crazy these days. This is the market overview quite often from pretty much every analyst that you would hear from. When you hear that the market is bullish, it means the market is going up. So correlate your hearing of the bull with his horn. The horn of the bull is always be going upwards, okay? It's showing up. And when you hear the word the market is bearish, imagine the walking of the bear. The bear basically walks like this, okay? Imagine it's his head, so he's always looking down. The bears would look something at the on the ground, okay? Imagine it that way. That would be your definition of the bull or bear. Again, bull would be upwards, bear would be downwards. Let's delete this too. Meanwhile, if you have questions, you can ask it. So now that you have learned some basic parts, I would like you to go ahead and register yourself a very basic demo account. I will be sending myself a link for you to open a demo account so that you can put the things that you have learned into action. All right. And we are going to be quite often asking you to do some homework in the coming webinars. It's not one of those webinars that you are used to. It is going to be very, very interactive, meaning I'm not just going to be here when the webinar is taking place. Meaning I'm going to be giving often a homework for you, which you will be expected to deliver on. So therefore, I would like you to open an account with Orbex where I can see your demo account. I would ask you or the company to give me the access to your demo account to see what you are doing right or what you are doing wrong. Okay? And if you have one, you don't need to open a new one. You can just continue doing it. All right. Now let's go imagining that we are going long. When we are going long, we aim to buy as low as possible and hold our position for a bullish market, meaning for the market to go up. What many people mix in Forex trading, and the biggest problem that many people have is that they make a position right away. Because of the spread, your account becomes right away negative. Because spread is something that you are paying your broker. Obviously, if you are not paying something to your broker, they need to make money somehow. Otherwise, you're going to end up with one of those bucket shops out there who are after you making loss. Not like Orbex, who wants you to make money. Okay? So when you are in loss, when you see that you are in loss, my direct advice for you is to put a stop loss. Don't go with your emotions, or don't panic attack. When I started trading back in 2005, a very good friend of mine told me one thing. When you start wishing, hoping, or praying, it means you should not be trading that day. I'll repeat again. When you start wishing, hoping, or praying, it means you should not be trading that day. So if you see that you are in negative and you go panic attacking, you start hoping, oh God, please help. Oh, holy moly, whomever you believe in, you start praying. It's the time for you to back up for that day, because when the second you start acting with your emotions, you're gonna mess up with everything that you have done so far. So imagine, let's say we would have opened a position over here, and right away the market would have gone more or less 10 to 15 pips against us. If you wouldn't have a strategy or clear strategy for yourself, you would have gone panicking and you would have closed your open entry. This way, you would not only have risked or wasted the opportunity that you would have had in the future, but also put yourself in psychologically negative situation, which we definitely always want to avoid. I will be going also through the psychology of trading in our following webinars, so that you'll have the understanding of why I would enter, as an example, at this level, and I would exit exactly at this level. You can see the market turns right away. Basically, in my situation, in my strategy that I'm applying all the time, I'm using three major elements. Those of you who participated in my trainings before, you already know it. I go for price action, I have the Fibonacci, and I have the moving averages. Okay, three simple things. I don't want to overcrowd my screen. Quite often I don't even put the moving average or any other things, and I like looking at a plain chart like this. This way we get to understand the market better. You get to understand where is it going without having your bias on. So you would be entering a position for Euro Japanese yen at 1.27, and you would be exiting it in this case at more or less at 1.34, 134. That would have given you a massive 700 pips profit opportunity. 700 pips, if it was, well, I'm going to imagine as if the pip value for Euro Japanese yen is $10 per pip, it would have mean $7,000 in 1, 2, 3, 4 days. $7,000 profit opportunity. I'm not saying that you're going to make this money all the time. Please do not confuse it. I'm not trying to mislead you. Our intention as Forex traders, more than making money, is to save our equity. So we would be aiming at the beginning, since you are all starting up, otherwise you wouldn't join this training today, would be making sure that you secure your investment, then you make money. Because if you can manage to secure your investment, making money will become much easier in the coming times. Okay. The next part is about going short. In other words, selling. When you are shorting something, you are basically selling of a borrowed financial tool. Basically, you are aiming for the currency pair that you have to depreciate, to go down. Okay. In our case, I have the Australian dollar. Okay, this chart is very old, but nevertheless, it gives you the opportunity. Right? So when you look at it, that I put a sell order. It was a real sell order that it's from my own desk that I have been trading. So each time what I do is that I keep a trading journal. Every single trade that I put, I make a screenshot of it, and I also write a note about it in my trading journal. Why I took that sell or buy order, just to make sure that I'm not basically going with my feeling, but with my logic and my clear mindset, which I would also highly recommend you to do so as well. So if I see that the market is breaking out over here, breakout meaning that it's not anymore up and down, it has broken a support level. We will discuss the support levels and how to determine the support levels in our next webinar. What is support, what's resistance, and so on. So when I see that the market has broken below the support level, I just enter with the market and aim for at least from this level to this level, which is more or less 300 pips, and I go with it. One thing about me is that I will not be able to teach you how to scalp, because I don't know how to scalp and I don't believe in scalping. But I'm good at swing trading. My entries generally would last between more or less 8 hours to sometimes to 120 hours, which is 5 days. This is my average entry holding position. So if you would have followed this way, you can see that you not only make 300 pips, but you actually make 800 pips profit opportunity. By the way, for this specific entry, my take profit hit, I had 800 pips profit in just one entry. Today's webinar was just very simple. The aim of this webinar is just to bring you to the level where everything you know, you get rid of it, and you understand that everything previously you knew could have been misleading you. Our next webinar is going to be next week. So end of today's webinar, by the end of today, you'll receive another email from me personally, an invitation for the next webinar. Okay. It's going to be next week, the same time. We have two webinars, if I'm not mistaken. One is on Monday, another one is on Wednesday. But I will clarify it completely for you. And I will be happy to see you with me. Before you finish up, I want you to share your questions with me, and also know that I'm pretty active on Skype. Indeed, we have two Skype groups, one with 2,500 people, another one we started it just recently, 100 something, 180 people. 2,500, I cannot add any more people there because it's already full. But 170 people one is still available. So if you add me on Skype via Rahimov, I would be able to add you in our community, where you would be getting the timely updates about market, and you would have the access to me directly face to face. Okay, that's so far it. And if you can please share your question, I would be very happy to answer. All right, we already have actually some questions. Harry is asking, many people describe Forex as glorified gambling. How do you counter that argument? Harry, it depends on how do you look at Forex. If you go put your finger in the air and wish to have the wind help you to define the direction of the market, yes, it's called gambling. It's worse than gambling. However, in my case, I put a proven mathematical formula behind, and I go with the mathematics for me to define the trend, and the rest is science. Okay, if you follow that kind of trading, you will not be gambling, and you will be making logical decisions rather than just going on the direction that you wish. Okay. Okay. Lavanya is asking, do I have professional classes? In my professional classes, yes, I have. It's me carrying out. We have two types of classes. One is individual, another one is group. And indeed, in this training that we are going to be giving, the webinars, you will be getting exactly the same course as it would be in my professional classes. The only difference is that the only major difference is that you don't have the voice to talk to me, but you can write to me, and I will do my best to answer you. Okay. Ronald is asking if I'm going to be giving money management. If I'm not mistaken, the 8th webinar will be dedicated to money management, Ronald. And today's webinar for Ching will be available as a recording. All you will need is just to contact me or to your account manager, so that he can direct you. Okay, Go is asking, I wonder what software or equipment you use in order to keep your things all together. We have our own, well, in my case, because I have my own company, we have our own software, but before I used to have my company, I was just like any one of you, and that time the cloud-based activity was barely coming up, so I was just using normal folders. Every month new folder, every year new folder, and within every month, every week, and every week every day. And I would have for every day a Word file with the journal in it. It's just that simple. Don't complicate yourself. Melissa, I will have my book available probably by the end of the year. I'm aiming for December, but bear with me. Next week on Friday, not this, the following week on Friday, I'm launching an ebook. It's completely free of charge. You will be able to get an ebook. It's an 8-page trader's journey. It's basically 5 pillars of being a professional trader. It shows when you read it, if you have any experience in the market, you will find yourself within it. It's just an amazing way of, finding your psychology that you didn't know that you have. Okay. All right. Okay, we have a couple of other questions. To participate the complete webinars this time, you will basically have one criteria, because it's a sponsored complete package by Orbex broker. They want to see, and so do I, want to see that you are not a time waster, but you are a serious person who wants to learn the market. The only requirement that we have from you, we are not asking you to pay $2,499 for my course. It's going to be provided free of charge. The only thing that we want you to do is to go ahead and deposit in your personal trading account $1,000. That's the only requirement. Once you have $1,000 deposit in your account, you will have the access to every single webinar that I have. There will be 18 webinars. It means that if you divide it by, on average, 2.5 webinar per week, we should be able to finish up everything in 2 months' time. And end of every webinar, because you have already shown commitment, you will also receive a recording of this webinar. So you can utilize it and listen to it as much as you want. Okay? That's so far it. In my trading companies that some of you are asking, we are not, well, I own a number of Forex related company. We do not provide fund management. We do not provide anything, but we provide media activities, meaning we provide breaking news to people regarding the market news. We provide specific activities from different part of the central banks, etc. Indeed, I'm actually one of the shareholders myself at A to Z Forex. So that's why today I can join you on behalf of A to Z Forex and 7 Markets together. That's about it today. Would you be able to just give me feedback? Did you enjoy today's webinar? If everything was well, and if anything that you didn't like that we could develop for the future. For the rest, thank you.